I'm out. Give me a trackpad here. It's all charged up. Ah. All right. Good morning, good afternoon, good evening, traders. Wanted to do an early stream today to catch traditional markets still open. Want to take a peek here real quick. SPY was up a little bit more, right? We had this pullback here. You can see pre-market, right? I mean, the way yesterday ended, pretty bullish in my opinion. There were some other things I was seeing in the charts, but you can see immediately, like this daily range never even got tested. So yeah, I mean, maybe the beginning of next week we see price action back down here. We'll see what happens with that. I just wanted to see, yeah, it was a big gap pre-market. Boom, things started running off. Found actually, you know, when it started, it ran, did a 1SD, blew by the 1SD, found support on it at the end of the day, right? It's bouncing. It's right under this weekly S. Let's see, weekly S1. Tell you what, SPY can come up here before close in what hour? You're going to see next week, you might see some continuation first. This is a little iffy here, though. I'm going to be honest. I don't. This area needs to be tested. There's literally no doubt about it. All right. Let's see here. Let's go back over here to Bitcoin. But anyway, a lot of volatility this week. A lot. Something to be aware of. Go back over here. Where are you? There you are. All right. Here's the beginning of the week. Here's the bottom of the weekly price action volatility range. Here's the problem I'm having with this, all right? Price action got up to about 34,250. Okay, 34,250, the bottom of the range. Yeah, guys, we're talking about price action didn't even get within $750, the bottom of the weekly range we've had. That's a no-go in my opinion. Never even made it, didn't even charge at it. That's another problem I'm having. It would have been different if this thing would have ran up. If it would have ran up a couple candles above this daily right here, ran a couple candles up into here, I would see that as a test. Dropped immediately. Never once did it even attempt to go try to test that area out. So let's see here. Interesting. You can see what happened to Bitcoin, right? As soon as we opened the day, had a little fake out to the downside, right? Immediately started pumping. Got up above the daily Laplace distribution range, right? The 68.3% probability level. Here was the range of the day. 2 wicks, bounced right off the top side of it, right? After it nuked through it, but you can see where the candles closed. We got a wick above this weekly S1, or is it an S2? Yeah, it's S2, sorry. This weekly S2 right here. So very interesting here. Major bounce, rips up. Where does Bitcoin literally reject all day? Right? This white cross line is the 95.4 Laplace distribution range on the daily. The blue cross line, the second standard deviation normal distribution. You seeing this? Right? Nice rejection. Where did we just find some support at? Right on the top side of the weekly S2. So we'll see how this ends by the end of the day, but let's shoot over on this chart real quick. All right, our probabilities. Let's reload, get on the weekly, because this is just lovely. So I've been showing people. Okay, we've got this projection. This is a Laplace distribution projection, and we're talking from the 48K high. Look at the wick. Look at the wick on this weekly candle. Pretty powerful. The volatility shot it through the third standard deviation normal distribution on the weekly. That doesn't happen often. In Bitcoin more often than traditional markets, but doesn't happen a lot. But you go back, and when you're on a weekly and you're running the distribution like this, guys, look at this weekly candle, 3SD to the dollar. Hit the 3SD, pulled back inside the 2SD, made a run for the 1SD. This is what we're doing right now. This ran outside right? Volatility literally pushed this price action through the third standard deviation, pushed it outside of the bell curve and normal distribution. Do you understand what that means? Pretty powerful. Of course, this is going to happen. And right now, on this weekly candle, there is a 68.3% chance Bitcoin's going to close above the bottom side first standard deviation normal distribution, 30.7, right? We were above it for a while. We were hovering right around under 32K. Or sorry, geez, not 32K. Hovering right 30, hold on. Give me a second, guys. What the hell's not making sense here? Yeah, right under 31. Got a coughing dog over here distracting me. And also is what's down here on this projection is the 95.4 Laplace distribution on the projection. There's a lot of probabilities that this week's going to close up here right around 31 probably. But we'll see. It's going to be tough on the weekend, right? There hasn't been a lot of price action happening. So this is going to be interesting. Last 5 hours of the market today. So what's that going to lead me to? It's going to lead me to my main trading chart where I do what is this chart? What am I looking for a lot on this chart? I'm looking for divergence between price action and log returns. And you know what's interesting about that subject? There's somebody out there who makes volatility, probability, and statistic indicators. Pretty smart guy, probably a little too smart for his britches. Because first off, he doesn't know how to use the indicators. He doesn't know how to apply them to price action, number one. He doesn't trade. And when he does trade, he's an awful trader, right? And this is the same person that also doesn't believe in correlating volatility, entropy, variance indicators to make them directional. The only thing that matters in these markets is being able to recognize what the algos are thinking. And to be able to do that, you need to correlate these non-directional indicators to price action. That is going to give you massive insight. The picture that is created by these indicators never lies. These indicators don't lag, right? They're all built on volatility. It's entropy, right? It's variance, the spread of data around the mean. Then all four of these indicators are used for divergence, right? Between returns and price action. It's literally, and if you're listening right now, because I know you love to watch our videos because you miss me. You can't even have an intelligent conversation with any of the morons you've surrounded yourself by. Full rant mode now. But anyway, listen to me, Goofy, Mr. Smarty Pants. When you recognize divergence between returns and price action, I don't give a flying shit what you think your math is telling you. In this case, you need to understand this is why you're a horrible trader. You need to be able to realize when the return on your investment is diminishing, right? But you don't know how to do that because you won't listen, right? It's not our problem. So you go ahead and you continue to think what you're going to think. We're going to continue to do what we do, right? Pump out productive traders. We are productive traders ourselves. While you're running some clown shit show, ran over. So guys, let's see if there is any div here. We're going to start, you know what I'm going to do? Let's fly this up onto the weekly. I was doing this earlier. First, let me turn off this projection here. Turn on the ultimate power mean. Very nice. Packed full, packed full. We got reverse wave trend, reverse Fisher, 3 different lengths of variance log moving averages. And I've been talking about this all week too. I was really interested on seeing this weekly candle pull up on top of this 99 length variance log moving average. That's going to be pretty important, in my opinion. Very important indeed. Look at the variance. Look at the z-score, or look at the log return z-score. Sorry, tongue-tied. Here's what I was pointing out to somebody else as well. I want you to look at when last time this here back here, 53% dump. The variance had an outlier on the weekly. But when that outlier started and that 53% pullback, look where the log return z-score was. Look where it started having an outlier to the downside that pushed it almost to the 99% confidence interval. It was really high. Guys, look what's happening right now. Look where this outlier started. Look at the log return z-score. You see the difference? Do you understand what I'm talking about? It's going to be hard for this move to sustain itself. When you get an outlier on the z-score of log returns and it shoots through these confidence intervals, it's powerful. You're usually going to work your way back up to the top side confidence intervals. The bottom is near. There's another reason why. Let's bump this up to a monthly. Turn. Boom, boom, boom. This is another thing a lot of people don't realize. We had that big down move. The higher you go on these macro time frames, using the distribution levels of the current candle, whatever time frame you're on, they are powerful. That volatile move was the weekly could not handle it. It literally trended right outside of the bell curve. Pulled back in quick though, didn't it? But look what did handle it. The monthly. You guys know that wick on an asset worth about 30K right now in USD, right? Within $30. It got within $30 of the 95.4 Laplace distribution range on the current monthly candle and pulled back hard from there. And in my opinion, by the end of the month, first, it's going to recapture the first standard deviation to the downside, right? About 31.7. We're not far from it. Probably going to go into next week, though, I imagine. This is all going to depend on how the last 2 weeks of the second month of the second quarter of this year, right, is going to play out. I would love to see it make a charge back up here to the 68.3 Laplace distribution range to the downside. You're back at 36K. And I'm talking by the end of the month. But we know how Bitcoin does it. When it's time, and this thing pumps. You have those $10,000 days. Pretty powerful. What else am I seeing here? So yeah, on the weekly, we are having this outlier, but I wanted to point that out. Right? The log return z-score had so much room to run to the downside now, right? I mean, it's pretty low. I wish there was some divergence building on the weekly. We're talking about there's a little bit building, a little bull div, right? Depends. Is what I do like though on a returns oscillator. This weekly candle, right? The read you're seeing on the returns oscillator, specifically any divergences, right? Look, correlation is decreasing, not increasing. You can see the blue candles, right? And we had this when it really started accelerating to the downside. That returns is what that's telling you. Trust the read on the returns oscillator. The price action is going to follow this move. Sure did. Whammo. But now it's losing correlation. If this were to be the bottom here, returns oscillator turn up next week, get a nice blue candle, and lock in the bull div there. No. Something interesting could happen. We'll see. We are trending though. Last trend on the weekly was the run up from 10K to 65. First run up to the all-time high. That was the last time the weekly trended, right? Ever since the top there, it's been random until now. The weekly entropy is starting to trend. All these other times, boy, it tried on the way to the all-time high at 70K, just couldn't pull it off. Another thing I like, the correlation's flashing. This could turn at the drop of a hat. Go hardcore trend to the right. See that entropy go hardcore trending down and flip positively correlated. I'm a dreamer. What am I going to do? But anyway, could this go lower? Sure it could. Of course it could. Not gonna bullshit. Let's see here. Here's what you got to look at. This is a game of probabilities. Game of probabilities. But now, you close this weekly candle below the 95.4 Laplace here on the distribution after this volatile move to the downside, you're more likely going to get some continuation. Now, what if it makes a run down, say, to the 99.7? High 18K range. If it were to come down there and test the 99.7. There's some other things pointing to that area. But listen, nothing is set in stone. We are 100. We're literally, I'm 100% confident right now on a monthly where the mean of returns is going to be here in probably 2 months. The mean of returns is going to be in the high 18s. That doesn't mean price action has to be down there. But that's where the mean of returns is going to be from a predictive model that the boys are creating in the background that is incredible. Eat your heart out, Goofy, over there in clown camp. But let's see here. This is what we don't want to happen. Here's the warning to all the traders out there. And at any time, you can come into this Discord. You can ask any questions you want. Hit me up. Ask me. Ask me, where did this weekly candle close? Did it close outside or inside the 95.4 Laplace distribution range there on the projection from the 48K high? It's going to be very important. Very important indeed. But next week, we're going to get some new probabilities. And I'm telling you right now, you open up down here, you're going to probably have a 3SD. You're going to have a 99.7 Laplace that's going to be literally down here by the actual projection 99.7 Laplace. So that should be real interesting. Let's see. Anything else to point out on that? This is what I wanted to take a peek at, though. This is what we're going to end with, too. Pretty much, right? What's the bottom line about these markets in general? There's a shitload of volatility. There should be wealth being made right now. I see a lot of people, I see a lot of comments of people in a state of trying to figure out how they're going to recover. That doesn't even compute in my head. What I don't understand with all this volatility, why you've put yourself in positions that you need to recover in this market, unless you just don't know how to trade. And that is 100% of the problem with what's going on in the markets these days. You've got people out there using traditional technical analysis, lagging indicators built on price action, the strength of price action. It's ridiculous. Sit me in a room with somebody for an hour, and if I can't convince them, there's no help. Any of us, there's many of us in this Discord that should be able to convince you. What you're doing is you're just following the herd. You're listening too much to YouTube Jimmy. It's incredible. So here's the market. And I have increased the correlation length to a 30. Okay? I've increased the correlation length to a 30. Traditional markets, right? SPY specifically, that's what I have pulled up here. And Bitcoin is highly correlated. Significantly positively correlated. I'm telling you right now, it's going to be interesting to see how SPY closes today. It's going back up now. Let me do something real quick. Pop SPY back up. Yep. Good. Probably didn't fully even get up, guys, right? Just like Bitcoin's chart. On SPY, here's the daily 95.4 Laplace distribution range and the second standard deviation normal distribution. If SPY closes up around 405 today, give or take 20, 30 cents or whatever, you might come out of the gates on Monday. SPY could trend to the top side. SPY could trend to the top side. Here's another reason why. SPY's weekly range never got tested. Telling you, watch next week. You're going to see SPY's going to come up here and test this 413 area. Does it reject there? Does it come back down? It could. Who knows what the hell's going on with these markets? That's why, especially if you're using traditional TA. Dude, do you understand the behemoth you're up against and what they're literally trading with? Everything you see that I'm showing you, this is what they're using. Not traditional technical analysis, but they sure are pushing that on people. So the market, SPY and Bitcoin, highly correlated. Now, when I'm trying to figure out like long term, that's why I've got this on a 3-day, right? And even on a 30, throw it up on a weekly. Look at it, guys. Look at the slope. And on a 30 setting, here's something I was showing earlier too. Was that on a, I think it was that on a, anyway, I can't remember. It's all good. But it was showing since the COVID dump, you can see how much more institutional adoption has happened, how highly correlated the markets are, right? It's pretty damn powerful. Pretty damn powerful indeed. I mean, here it was right here, right? Here's the COVID dump. Significantly positively correlated. Here's where, right about here, the correlation fell off a cliff. Bitcoin dumped while SPY was rising. We seeing this? How important correlation? I gave a little seminar earlier in another Discord about how important this is if you understand correlation. You're going to be able to trade assets together. Now, am I using a 30 length on a weekly chart to trade? No. I'm down here. I'm on a 4-hour chart. And I'm on a 10 length. Boom. Right? I want to see intraday what's going on with the correlation in the markets, right? And price action. So, yeah, good stuff. Moral of the story, market's highly correlated right now. Big time. They're moving together. Everybody's feeling the pain. So when's this going to turn around? Is the bloodshed over? Right? That's what everybody wants to know. And at Alpha Trading, all as we tell you, there's a weekly distribution right there. All right. This is where there's no other place a projection of a distribution should start on this chart right now. Right? This is great. And then the higher you go, like on this macro, I mean, I liked running a projection from the 41K low, but yeah, pretty over it. Want to get more, start something more significant, especially if this weekly candle closes above the 95.4. We get a couple bullish weekly candles to the top side. I'm starting a new projection, right? And then I will flick on and off. I've always got a few over here, right? So I'll leave one anchored and check it randomly to see if I start a new projection, and then you see the projection I started on the down move, there's some stuff corresponding together with the new projection started up, different probability levels. There could be something to it. That's when you need to really keep an eye on the volatility, because that's what this is all about, right? That's what this whole thing's about, being able to understand the volatility. This beautiful indicator right here that just looks like a mess to most people. That's what we want them to think. When you understand how to read this, it's all you need. It's all you need. You hear that, clown man? Captain Clowny over there in the poor clown camp? Correlate your volatility. Figure out the divergence between price action and returns. All right. Who's in here? Sayron, you got any questions? MJ, what the hell are you doing?
What's up?
See, we got like a.
Is my mic working today?
What's that?
Is my mic working today?
Yes, it sounds real good.
Oh, good.
You guys haven't lived until you've lived rent free in somebody's head. Not just
really.
somebody, a whole community. We're missed.
Well,
Anybody that knew anything about real volatility trading left. That's what's hilarious.
Yep, for sure.
And the rooster of the bunch, he can make the indicators, but he damn sure can't use them.
Yeah.
Which is unfortunate, for crying out loud. Very unfortunate. People are being led astray. But that's fine. Yep. We're here for anybody who wants to learn how to trade volatility, because it is exciting. Why everybody else you see is crying. Why are they crying? Here, I'll tell you why. They're trying to swing trade volatility. You don't swing trade volatility. You think the high frequency trading firms are swing trading? You think their algos are swing trading?
Do you think it's by mistake that our indicators literally call the hour that Luna would be dead?
Yeah, exactly.
No, it's not. It's not an accident. That happened because we have good tools.
Guys, look at the 5-minute chart. Hold on, let me turn off the UPN. What a powerful damn indicator. Where do you think the algos are trading? Everybody needs to wake up. So, this, understanding correlation of non-directional indicators, understanding divergence between price action and returns. It's like taking fucking candy from a bait. While you struggle out there, whoever you are, if you're listening to this, struggling in the markets, you don't have to, man. You don't have to. The biggest problem people have is taking profit and getting out of many positions. I'm telling you right now, if I get into a position on the 5-minute and 2 5-minute candles later, the price action's below my entry, do you realize I'm not even in that position anymore? Did I market it out of it? That's how I limit my loss. I don't care if it goes down $50 and then goes up 1,000. Because you know what? I'll probably be back in the trade anyway. But I'm not. What if it went 1,000 down? This is where people fail miserably. It's the hardest thing to do. You could throw darts at a dartboard. Red, I'm going short. Black, I'm going long. And if you get an entry and it turns against you and you just get out of it and stay in the trades that go with your dart throwing, you understand what I'm saying? It's not hard to trade. You make it hard on yourself because you don't take your profit and you don't limit your loss. You have to.
You're emotionally attached.
Yeah, you have to cap your risk. Just like options. You got to cap your risk, and you got to take it seriously. You can't just sometimes do it. If the trade goes against you, just mark it out of the thing. Don't set a stop loss. If you're a real trader, you're sitting in front of your workstation, right? probably empty two-liter bottles and 32-ounce coffees and pizza boxes and all kinds of stupid shit. You're a mess. You're a degen. But on a real tip, you got to take it seriously. Take your profit. Well, that's easier said than done. Where? I don't know. Distribution levels, price action volatility ranges. You're running a projection on the 5-minute, right? Are we scalping? I'll show you some. Well, let's have fun. For the last, what do we got? Half hour? I mean, there were so many moves, it's ridiculous. It's a down move right here. Let's see. When you run projections down here on these low time frames, if you wonder why price action's just jumping around everywhere, going up and down, creating these ebb and flows, dude, they're in. I don't care what. There's a distribution for every time frame, and it's being respected. 24. Let's see here real quick. And it's as easy as this, especially if you're seeing the move, at the volatility, right? What's happening with the volatility? That's why. It's not like I'm bouncing. I'm through tabs. I've got 6 monitors. I've got all my charts up. I got all my exchanges up. Probably 3 different monitors because I'm trading more than one asset. But look how easy this is. You're out right here, right? As soon as this wick as soon as I start this projection, I'm probably putting a limit buy, front running that 95.4 at about, let's say 29.7. Okay, so what if I'm in right here? Yeah, $300 scalp on the 5-minute, 15 minutes. Now, what if you're in a 5 Bitcoin short? In 15 minutes, you made $1,500. Just by taking profit. On the 5-minute distribution.
Those are skills people just don't want to learn, it seems.
Back here. Another great example. 40 bars. Swap this baby up 40.
Everybody says they want to be a trader, but when you give them literally the tools to do it, they just deer in headlights.
Freaking move. Almost, I mean, pretty much did a 99.7. And here we go again. Boom. You know, I'm using. And if you want to know, well, what do you use? Would you have been down here? No. I'm sticking to my guns. 95.4% chance that run does not this 5-minute candle does not close below there. Sure did. Look at it pull back up inside. Look, I mean, it's still pulling. There's a 95.4% chance. Now, when you're talking like a 5-minute chart like this, I'm probably not going more than in between 30 and 50 candles. It's too long of a time series. The volatility changes too much, especially in today's market. Holy shit. I'll tell you what, you want to see poetry in motion, you want to see some magic, go throw these indicators, go throw all this shit on some Forex pairs. And go, why aren't I trading Forex? This is what I was trying to explain to somebody about their little leverage addiction. Look, leverage is for assets that have no fucking volatility. Like Forex. That's why there's some exchanges you can get 1,000x or some stupid crazy shit. That's because Bitcoin literally can have a percentage move in a daily candle that Forex won't have in a year. That's how insane. You don't need leverage with Bitcoin. You need to learn how to trade low time frame volatility. Holy shit, man. If you can afford to put 1 Bitcoin in a trading account and you intraday trade and get entries on the 5 and 15 minute, limit your losses and take your profits at the distribution levels.
Take money.
I feel like I have to reach through the virtual screen and just smack people. I mean, what's so hard to understand this? Why you dick around and try to guess at what the hell's going on in the market when you have no clue. You're chasing price action. Price action follows the returns. Price action doesn't mean revert. The returns do. This is where people get so fucking confused. They're like, so price action is worthless. It's just
That's
the
what
data
divergence.
set. It's just the data
That's what
set.
divergence.
Yeah. That's all it is.
That-
At it like it's just a data set. It's a very volatile data set that you're tracking with these fucking wonderful tools. These alpha coders put together. Right? The old coder wolves. Good stuff. But anyway, there's many examples. All these moves, guys, on the 5 minute. Right? And it's what's even better. I mean, you kick it up another notch. Variance. You get real volatile days, look at the rise in the variance. The variance is a spread of data around the mean. What is that? It's volatility. The standard deviation of returns is volatility. When the data is spreading out, it's volatility. Look at the variance on the 5 minute. Very tradable. Very tradable indeed. And for all the dumbasses out there that don't understand the divergence between price action and returns, I like to duct tape your ass to a damn chair. Maybe I think I'd even waterboard you for about 5 minutes because I know you love that kind of shit. And burn this into your consciousness. How powerful the divergence between price action and returns is. Price action and log return z-score is. With a bounce off the 90% confidence interval. Divergence with Fisher transform. Divergence with the DLP. This whole 5 minute move right here from about 29,350. I mean, we're talking about $800 was because there was a shitload of bull div on every indicator that I use for divergence. The Fisher transforms right there in the same class. Fisher transforms price action into a normal distribution. Freaking poor guy. He was probably finally starting to learn something from me, and then he had to fucking piss us all off, and we had to leave. Especially the Fisher. Look how long this bull div on the 5 minute was building on the freaking Fisher. When you see div on the Fisher, newsflash, take it seriously. Because I'm sure you've already noticed it's the last indicator that will show it. And when it does, same with the DLP, right? You're going to see more div on the returns oscillator and the log return z-score than you're going to see on Fisher and DLP. For Christ's sakes, when all four of them are firing, that's what happens. What a trade. Ended up with an outlier. Woo! Powerful. Nice steady move. And pretty much the whole time was what was happening. This is not trend, right? This is not trend. There was not volatility expanding. This is drift, baby. Right? Why? Because the volatility was contracting, negatively correlated. That's why. And when that happens, the fucking drift is on, baby. What we like to just call walks up. Randomly just walks its ass right up. Now, why do you say it's randomly walking up? Hello? Whee! That's why. Look at the entropy dropping right back into randomness. Entropy percentile. All right, contracting. I don't have these on the same length, so I need to change this up. But yeah, powerful charts here. So if you guys over there want to learn how to use your indicators to trade, you can join the Alpha Trading Discord, right? The link to the description is in all of our videos. It only costs you guys $10 a month to witness the genius that is alpha trading. Don't be afraid, right? Don't be afraid. You want to come over? We're here for you. I feel sorry for you guys. We're here, aren't we, fellas? Open arms.
Good stuff, man. Good stuff.
We'll teach anybody. That's what's so funny.
Yep.
They act like there's some war going on. There ain't no war going on. We're literally teaching people how to trade volatility and building indicators to do so. We're not trying to have some squabble where it's like, dude, you got to be on the same. There's no squabble involved. There's you gotta get on the level first. Come talk some sense to me. You want to talk about correlation? You want to talk about divergence between returns and price action? And we get on the same level there first, then we can have a conversation about everything else. Until then, though, it's not even worth having because you just don't get it. You just don't get it. So, just like he always used to bitch about Tom at Tasty Trade, just not getting it, right? About volatility. Like, well, there's a common denominator in everything that's going on in the universe that's going on over there, and there's only one common denominator of every problem that's ever happened there. So, no brainer. Okay.
Love you, dictator. Miss ya.
Lovey dovey.
Have fun selling Daddy's apartment.
Lovey dovey. For sure. It's all good. I helped him out. I helped him out with some issues. That was the thanks I got, which is all good. He's an egomaniac. I'm not in the game for that. I just want to help people. Yeah, and that's what's great about the divergence too. What just halts price action in its fucking tracks? The entire market, divergence is moving it. Why? Well, because what do you think moves the market? It's like you got buyers and sellers, right? Pushing the market around. When there's an imbalance in that, when there's an imbalance in the velocity of the buying and the selling going on, it creates divergence. That divergence creates either a continuation of a trend or a trend changing data set. I mean, this is what's crazy to me. Traditional divergence, shit can it. It has to be between returns and price action. The algos are all about this. It's a profit thing. You know how many trades they probably make a day? It's stupid. It's ridiculous. These things are just pumping them out. And it's all about profit taking. Their P&L shocked the shit out of you. Jesus Christ, it's probably 100%, man. I mean, these things, you get these super sophisticated algos. That's the thing, that's the battle that goes on between the firms too, right? They're all trying to get their own proprietary freaking trading system, their own algorithm that's smarter than the other firms' algorithms, tricks the other algorithms into thinking into bad positions, things of that nature. There's where the war is. And as volatility traders or alleged volatility traders, instead of having some sort of battle going on, it should be just like the communities fucking are literally trying to spread the message to the masses. But instead, because somebody's jealous, it's like it doesn't work like that. It's sad. Sad. It's all good. We're here doing our thing. No complaints. Right? You won't see complaining going on in the markets. When the volatility kicks up, the alpha trading discord's like fucking memeing up the salad days and shit. Yasha leading the charge, posting about 10,000 charts.
I love it.
He's a man. He the man. Let's see here. General, where is... Yeah, I wasn't even on stream chat. Hilarious. Yeah, we did the early stream. Let's see. Yeah, just a couple. Nothing big. But let's see here. Not too much more to talk about in the freaking markets. So yeah, if you are watching this on YouTube for the first time, we're alpha trading. We trade volatility, probability, and statistics. And we like to share this information with others. You're not going to find these big firms sitting out there with the bullhorn telling people about the distribution, right? Trying to teach people about these statistical indicators and about volatility and entropy. And I'll tell you who's on top. We're way ahead of the curve on the entropy thing. They're just catching on to it. These guys, nobody's correlating anything. Because we do have some brilliant people over here coding. Let's see. We're working on some magic right now. Couple different things. There's magic brewing. Magic brewing. So, yeah, I got thrown off track there. But yeah, so the link to our Discord's in the description. Check out the shop channel. There's 2 different levels of the Discord. You'll never hear this in any other YouTuber, right? I recommend the lowest level. Come in and check us out. If you want to join the Discord, when you first come in, you're going to see about 5 channels. There's nothing going on. There's a massive Discord with you will be shocked at the amount of information that's spread throughout it and the cool people that are in there. It's $10 a month. You get 4 indicators, basic volatility indicators to get you started. Get your feet wet. The most important thing when you come is to learn about correlated volatility. That's the first thing you want to dive into. And that's where we start you. Now, the second level to our Discord, the whole entire alpha trading system, right? It's like $100 a month. Great discounts for 6 months or a year subscription. I don't recommend that because you're going to come in and you are going to be overwhelmed. We've got about 30 indicators. Learn the basics first. Don't overwhelm yourself. The learning curve on this is massive. I don't care how smart you are. Or like most people these days, how smart you think you are. It's not about being smart. Somebody told me that I'm a very smart person. I was like, not at all. Left high school in the 10th grade. I guarantee you right now, I will outwork you. That's where you get forward in this world. Not by being smart, but by being able to outwork everybody around you. Studying. Right? My volatility so-called mentor. He just pointed me in the right direction. All right. I did all the studying. Relentless. Going crazy. Anybody that knows me knows how intense the last 3 years have been. I mean, I'm hardcore about this. So is Yasha. So is MJ. So is Andy. So is Van. So is Donnie. All of us. That's why we started this. Crypto warlord. He's over in Africa. He's beating down the neighboring tribes with math. The probabilities. It's all about probabilities. What's a probability of this tribe getting that goat through that fence?
Like 100%, G.
Yeah, man.